Good morning, good evening, good night. We're watching this transmission. It is I, Mike Martins, bringing you another silver and gold discussion. And this was written by Niels Christensen for Kitco. Kitco's got really good articles. Kitco kind of sees the future when it comes to precious metals, and they've been on focus with precious metals for years. They've discussed the manipulation when gold was manipulated for many years back in the day. A lot of the Anglo countries kept, or British or the United Kingdom, kept a huge suppression on gold for many years by manipulating its pricing and just Mickey Mousing things. And then after the U.S. taking itself off the gold currency, the gold-backed currency, and that was a huge move. They needed Richard Milhouse Nixon in 1972 needed to remove the United States off the gold standards because the U.S. couldn't afford to go to war if their currency was backed by gold. It would be very hard. So they needed to remove it and kind of create an economic backed currency, which did well for a good while, and then it just started to deteriorate really fast in the mid 80s and into the early 90s. And then we saw what happened in 2008. And it's becoming more and more of renegotiating the rules. Is gold the future? So someone sent me a question from Chris. Good day, Mike. Hopefully you are well. Mate, can you talk about gold and silver? Is it the future? Gold and silver has always been the future. Gold and silver, especially if you go back to the Roman times, they started removing gold and adding different alloys in their metals to put less and less gold. And you think you have more value in your hand, but you're not. You're holding more inflation or less. You try to trade in 100 shekels for one gold piece. Some banks or some traders wouldn't take it, regardless if it's legal tender. So is gold and silver the future? Oh, definitely is the future. It is, but the question is, would the big players, the money makers, the money printers, the lawmakers, would they allow gold and silver to be the future? That's the question. That's the main question. So, Degussa sees gold prices pushing to $1,690 and silver to $23 by 2020. And silver's up 3 cents today, actually, at $16.86 US. And gold is sitting at $14.94.80. So here it is, guys. Kitco news. With gold trading closer to its fair value and embarking off a new bull market, one European precious metals firm is increasing its long-term forecast for the yellow metal. In their latest research report published last week, Degussa and Analytics said they are increasing their price target for the yellow metal, calling for a rally to $16.90 an ounce by the end of 2020. At the same time, they see silver prices rallying to $23 an ounce. The gold market is currently seeing some technical swelling as investors continue to take profits following last week's push to a fresh 6-year high. Last week, silver prices reached nearly a 2-year high. However, analysts remain optimistic on gold and silver's uptrend as an initial support to hold at $14.80 and $16.80 an ounce, respectively. December gold futures last traded at $15.05 an ounce, down 1% on the day. Meanwhile, September silver futures last traded at $16.86 an ounce, down 1.5% on the day. The analysis said that the threat of global recession due to the ongoing trade wars between the United States and China will continue to keep a bid under gold. However, they added that the global monetary policy easing is what will drive prices higher. So, monetary policy easing, well, what do they mean? Printing more money, adding more to the system. The more money we make and put on the system should value the price of gold higher, devalue people's savings and their current savings in their bank accounts, their wages go down, technically, even though they're making the same, but they don't understand that they're making less because the amount of money that's been out there, right? The only way to fix this, the only way they could fix this is by using some very sophisticated macro tools to start destroying money that's out there and start minimizing how much is out there to raise the potential value of the money. But there's just so much, it's so far gone that we don't even know how it's still standing on one leg now. The analysis said the Federal Reserve's rate cut in July has heralded a new global easing cycle, with the European Central Bank expecting to join the trend next month. Remember, most of Europe's at negative interest rates right now, and they're buying back their negative packaged bonds at negative rates. They're buying back their own debt. It's crazy. With the world's interest rates heading to zero, is the bond market going to head to zero? The U.S. bond market? It's pushing there. It's like 1.4 the other day I checked. With the world's interest rates heading to zero or even below zero, official currencies can no longer be viewed as a reliable store of value. The analysts said in their report, with market interest rates at or below zero and consumers and asset price inflation continuing, cash and liquid bank deposits will lose their purchasing power. Yep, bank deposits and just cash itself will lose purchasing power. It has been losing purchasing power for the last, since 72, 40, 46 years? 47 years? Or 48 years? 48 years. It's been losing its value for a long time. Last week, Finnish Central Bank Governor Olli Rehn said that the ECB is looking at releasing a significant easing package at the next month's monetary policy meeting. All these bullcrap packages, these tools they keep bringing to the table, they don't do anything but disturb the flow. In the U.S., economists and analysts are expecting the Federal Reserve Chairman Jerome Powell will set a stage for another rate cut in September. CME FedWatch tools show that the market's but expected rate cut, there is a 5% chance that the central bank cuts by 50 basis points. So if they do that, we are going to see huge movements in the markets. So what will Powell do at Jackson Hole, and what will it mean for gold? So this is from today's date. I'm reading this from the future, guys. Kitco News: with Federal Reserve September rate decision looming, Chair Jerome Powell is likely to leave a lot of room for central bank to maneuver during his address of the Jackson Hole Symposium on Friday, according to analysts. Analysts do see Powell opening the door for more than a 25 basis cut in September during his Jackson Hole address titled Challenges for Monetary Policy. Now, this is very interesting because they know what's going on. Why are they leading us down this rabbit hole? They know what's going on. It's not like they don't understand. They know. Okay, so let's go here. The Fed wants more stimulus in the market, but to avoid a fear that could postpone any big purchases. Another 25 basis points probably prudent to get the stimulus into the market, but 50-point cut might send red flashing lights into consumer sentiment and might be self-defeating, O'Connell added. Well, you're seeing a lot right now of consumer confidence go down to the ground. Right now, consumer confidence is not doing well at all, and especially you're seeing it in the auto sector. You're seeing it in the construction of new homes or construction of new projects not happening. You're starting to see a shortage in a lot of the big superpowers right now. India is going to have announcements first week of October in their auto sector. They may be laying off 30% of their workforce, right? While the door has and should be left open for further action, we don't think Powell will paint the Fed into a corner again. Well, think twice. You never know. Not when the data suggests otherwise. Thin wrote, indeed, the picture painted last week by the U.S. data is a good one. Headline retail sales rose 0.7% month over month versus 0.3% expected. The so-called control group used GDP calculation jumped 1% month over month versus 0.4% expected. Plus, the Federal Reserve is still trying to figure out how it should be reacting to the global trade tensions, Thin added. I said the F word here. I hope they don't flag my video. No one can really say what the Fed's likely reaction function is right now with any degree of confidence. Markets clearly believe that the Fed will bail Trump out again, but we are not sure. We do not think that the Fed should reward bad trade and fiscal policies with rate cuts, he said. Well, you did it in 06, tail end of 06, 07 and 08 in huge numbers, like unprecedented numbers. Meanwhile, U.S. President Donald Trump has not let up when it came to putting more pressure on the Fed to cut rates more aggressively. The Fed rate over the fairly short period of time should be reduced by at least 100 basis points, with perhaps some quantitative easing as well. Okay, there is a future for gold and silver, my friends. Powell will probably be more hawkish than the market's anticipating, said Pepperstone, head of research, Chris Weston, with a 32% chance of a 50 basis point cut priced into the rates markets for September FOMC. It feels the balance that, if anything, Powell will be more hawkish than current pricing is suggesting, and it could be U.S. dollar positive affair, Weston said in a note on Monday. On Monday afternoon, however, the market sentiment seemed to shift towards a dovish one. In the time, writing markets were pricing 95% chance of a 25 basis point cut and a 5% chance of a 50 point cut, according to the CME Federal Watch tool. So here it is here. Gold and silver prices pulled back as global stock market rally. So we saw the rally today. I saw oil go up, and it broke my heart, and I shed a tear because I got out of gold and I went into a bunch of silver miners that did well for a while. And now, are they going to go back to where they were? That's the question. Gold and silver prices are lower in midday U.S. trading as a trader and investor risk appetite has ticked markedly to start the trading week. However, prices, both metals, have moved well from their daily lows. December gold futures were down 11.30 an ounce at 1,512. September COMEX silver prices were down 0.14 cents at $16.98 an ounce. Bull markets, even the strong ones, don't see prices go up every day. In fact, corrective chart consolidation is healthy and suggests the uptrend can be sustained. Yeah, you don't see them go up. I always see the markets. I always like when I was heavily in oil, you would see when gold went up, oil went down, or when you see some sort of tensions in the Middle East or Iran and stuff happening. What was that? It wasn't Iran. It was something happened with that drone that got shot down, and my oil stocks went up like 8% overnight. So tensions in the market, and trends in the market. Global stock markets higher Monday. U.S. stock indexes were solidly higher in early afternoon New York trading. There were no major geopolitical developments over the weekend. Ooh, God forbid. We have a whole weekend of quiet. And civil unrest in Hong Kong did not escalate as many had feared. Upbeat comments about U.S. economy from President Trump and his economic officials over the weekend, namely saying there is no recession on the horizon, is also boosting investor confidence. Weekend news: China plans to further stimulate the economy with interest rate reforms, has combined with news late last week that the European Central Bank plans to further monetary policy stimulus in September, has brightened the world workplace. Woo! Everybody jump in the line, one country at a time. Okay, I believe you. Safe haven assets, U.S. Treasuries are under selling pressure. The U.S. Treasury market yield curve is no longer inverted after briefly becoming so last week. The key outside markets today: the NYMEX crude oil prices higher, trading at $55.75 a barrel. The U.S. dollar index is modestly higher. Later this week, annual Jackson Hole, Wyoming Federal Reserve confab sees central banks of the world attending will be closely monitored by the marketplace. So there's your gold, guys. Yep. New York copper closed 70 points. Okay. September silver future prices closed midday range today. The silver bulls, the solid overall near-term technical advantage on 11-week-old uptrend. Sorry, an 11-week-old uptrend is in place on the daily bar chart. Silver bulls next upside price breakout objectives is closing prices above solid technical resistance at the August high of $17.49 an ounce. The next downside price breakout objective for the bears is closing prices below solid support last week's low of $16.51. First resistance is seen in today's high of $17.17 and then $17.31. Next support is seen today's low of $16.82 when $16.85 of the wacky offs market trading 7.5. So here it is, guys. Gold and silver, is it the future? It always been the future. But what do we do? How do we know about how do we hedge against manipulation? As an investor, I'm an investor. How do I hedge against the manipulation or the suppression of pricing when gold, in my opinion, I already said this before, gold should be sitting easily at $2,200-$2,300 an ounce. Silver should be easily at $160 to $205 an ounce easily. With the derivative markets out there and the IOUs and the silver certificates and the gold certificates, with the bank saying, "There's your certificates." So we got certificates. We got like this many certificates stacked, and then we have this much gold in the this much silver in the world. These are our silver certificates stacked from the ground paper right to the top, and this is how much physical silver we have on the planet. It doesn't work like that. So when people start calling in their physical silver and demanding their physical silver back, you're going to see a little bit of problems, especially with other banks in Germany like Deutsche Bank, people going there and saying, "Hi, I'd like to cash out my gold certificate or my 500 ounces of silver," and they're telling them they're going to mail it to them and they don't receive it in the mail. You know, things are not looking good in the gold and silver market when the manipulation continues to grow. Would the gold break away from the British pound? Yes. You're going to start seeing gold breaking away from the British pound because of England, the UK, and having to pay for its exit fees for Brexit. So it's going to be quite a bit happening with the UK. So we're going to keep an eye on the British pound and the price of gold because I see gold breaking away from the pound. And if it does push to 1690, you're going to see a weak pound. If this thing's accurate by 2020 and $23 an ounce for silver. That is a dream come true for myself. Anyways, guys, do your own research. Look at small cap silver mining and small cap gold mining companies. Just look at small caps. They got lots of room to grow. You know what I'm saying? Do your research, read books, understand what's going on, and try to understand the manipulation that happened in 04, 05, 06, 07 when gold pricing was heavily manipulated and heavily pushed down. Read up on that stuff to understand why we're in this predicament we are today. Where is it or isn't? Are we gonna go? Are we gonna take off? Is it gonna break? No, but you're gonna see dips like today. Today was a huge dip for me, and that's normal in an uptrend. You're gonna see uptrends. You're gonna see digression, pull back through a couple of days of the week. Then you see rebuilds, pullbacks, rebuilds, pullbacks. If it keeps slowly incrementing upwards, then you'll start seeing markets start to turn, and you're going to start seeing people fleeing U.S. treasuries. China and Russia have been selling U.S. treasury bonds to buy gold, right? China and Russia have been buying gold since 2012 in huge numbers, right? So we'll see what happens, guys. Let me know in the comments below. Are you a gold and silver stacker? If you are, how long you been stacking for? I know I've met a guy the other day who's been stacking for 22 years. Silver bars. and some gold bars when gold was at $1,100 an ounce. Let me know. Comment below. I'd like to know. Thanks for watching, guys. And if you want to support this transmission, go ahead and support me on Patreon and donate $1 a month to buy me a coffee. Thanks for watching.